Hey everyone, I'm Eli Q, and this is Libby Cefaly, and we are with Q and U Real Estate Team. And today we're going to talk real estate. Libby, what's your take in the Philadelphia real estate market currently?
My take on the current market in Philly is, I think people weren't used to seeing a normal market after the spring boom. I mean, homes were like flying off the shelves, super low interest rates, like 50 to 100K over ask, especially in the suburbs. And now we're just seeing good opportunities for buyers and sellers in this normalizing market.
And I like that. And for most people, there's been a couple of years, so a lot of the millennial buyers haven't experienced this, and they're not sure even what the rates that they mean, right? Because they're buying for the first time, and they could be getting 4.5% or 6.25%. They're just not sure.
Right.
And I think that it's our job as a real estate agent to educate and inform our clients.
And I think rates are still historically low. When my parents bought a house, when your parents bought a house, their rate was like 13%. So it's just normalizing the market, and I think it's going to end up making the market even stronger than it was before. But I mean, you and Julia are out on the main line now. What are you seeing in that market?
Yeah, so in the main line, we're still, inventory crisis is still real. So we're seeing the shortest inventories that we've ever seen. When we look at the first and second quarter this year, we've seen about 10% appreciation increase year to date.
It's
even
crazy.
After having 2020 and 2021 be like unbelievable years for the main line. The other thing that we want to talk about now with our clients is that we are already on the other side of it. As you mentioned, the market is normalizing. So we're not seeing 30, 50 offers on specific properties going 10, 20, 25% over asking. Sellers at that time, and even just this spring, they were listing homes 10% above what the market value was. And they were getting another 10% on top of that with, multiple bid offers going above the list price. That's no longer it's happening right now. And that's what we're seeing. We're seeing, less showings overall. Less buyers in the pool out there, but the buyers are looking right now are very serious. They want to take advantage and be part of the community. So you can even say that these are the buyers who were left over that were not able to find a home the last couple of years.
Absolutely.
And we're seeing around 3 to maybe 5 offers, on a property. Because inventory is so low, the demand's still there. So sellers are still benefiting there by putting their homes on the market.
Absolutely.
Buyers, on the other hand, may have some chances where they can get a home inspection and make sure that structural items that are so important when you buy a home are solid, and they can sleep at night that they've done a home inspection.
I think it's really giving buyers that couldn't find a home during the crazy market an opportunity to get their foot in the door and actually make a strong offer that they feel good about.
Absolutely.
Still find that home.
Absolutely. And majority of the home buyers right now looking to buy in the main line, this is not their first time, This mostly is probably their move up home, that they're starting a family together or just looking for more space. And the interest rate really doesn't faze them that much, Because they understand just a couple of years ago, interest rates were in that 4%, But they really want to, for them, they're thinking long term. They're thinking, I want to be part of this community, raise my kids, take them to the school. They are amazing here. And if rates come down later on, they're just going to refi and lower that. But for now, what's more important, just finding that home.
Securing the property. Yeah,
exactly.
Absolutely.
Libby, what type of conversation are you having right now with your clients?
Yeah, so I've been reaching out to a lot of my previous clients in my sphere, just making sure I can educate them on the market because everybody's talking about it because this market has changed so quickly. But it all depends on where they're looking to buy or where they're looking to sell. Like real estate is such a hyper-local market that if, it's a totally different scenario versus they're looking for a home on the main line or they're looking for a home in Graduate Hospital or Bucks County. It's totally different everywhere. So I think those are the conversations I'm having and just making sure that they're up to date. Like we just sent out our Q2 market report. So I've gotten a lot of questions from clients in my sphere, just kind of about where things are heading and what we're seeing in the market. What are you seeing with investors right now?
Yeah, with investors right now, we're having conversation, right? We're educating them on the market. a lot of them are thinking, what did this all mean? A lot of them are preparing for the worst, right? They know that right now we are in a recession. They know that the market has shifted, and there's going to be opportunities there. So we're encouraging them to be ready. So we're making sure that all the investors, for example, that used to come for us for deals, and we weren't able to find any because the market was moving so quickly,
so fast,
and the supply was so low. There weren't any opportunities, right? Or as much, at least. And this time around, we're just really having that conversation, educate them, getting them ready. So when the opportunity presents itself, and making them confident enough so they can take advantage of it. By knowing, the real stats, real market. As you said, in Philadelphia and the surrounding neighborhoods, we're known, to be the city of neighborhoods, right?
Block by block.
Block by block is going to change. Community by community, right? School district by school district, and we just want to really make sure that they have that information there, and we can help them and guide them make the right decision when investing in real estate.
Absolutely. Yeah, I think there's a lot of opportunities for investors right now. We've had this conversation during a recession is when, investors and people who are looking for those opportunities take advantage and grow their wealth. So I think there's a lot of that out there.
So good, disciplined investors will take advantage of the opportunity. What really is going to happen is that we're starting to see it now, right? We're starting to see that people are freezing. They're not sure about what to do. And good investors, what they're going to do is they're going to take that moment where everyone's kind of standing still, and they're going to find the new pathways they're going to get, right? The new opportunities, and make sure they take advantage of it before everyone else knows it, right? Once again, everyone starts thinking, hey, it's time to buy again. That's when most likely, the opportunities are probably starting to shrink.
So one of the biggest questions I'm getting from a lot of my buyers right now is if they should hold off and wait for rates to come down and for the market to settle, particularly people that either are renting and thinking about buying their first home, or people that are moving from out of town, say they want to move to the main line and they're worried about inventory. What do you say when you get asked that question?
Yeah, first of all, what comes to mind is that just obviously someone's situation is very important to know, but if they're currently a tenant and they're renting and they're paying a monthly rent, and just because they haven't had any opportunities to find the right place, and I can see how they're discouraged, right? And they need to make a decision. And continue to rent is the easiest one. And after hearing all the rates so high and rates that, of course, it could be problematic. And what I want to do, first of all, just educate them a little bit in real estate, and really finding out their motivation to why they're looking to make this in the first place. So being a first-time home buyer, some of the benefits that you have when you become an owner, right, and you take home ownership, is that you're building wealth over time. And rates are going to be where they are no matter what market you're going to be in. They may be a little bit higher than normal, than what we're seeing, or lower, right? But to homeowners, future homeowners, what I tell them is that when you're thinking about buying your first home, you have to remember that, instead of paying 100% in rent per month, that's going towards the equity, right, of your home.
You're still building wealth.
You're building wealth, right? And over time, your asset is appreciating. So that's when the compound effect, right, happens too. Year over year, it starts slowly, but once you're into 7, 10, 15 year when you own an asset, that's when it starts to get magical. These are numbers that they're retirement numbers where someone doesn't have to worry about, because think about it, your 401k, it's how's it performing right now? Not great. So that's why real estate still is the most preferred investment for many people. So when people want to take a step back, we really got to find out why, because it could just be because of the information that they're getting that could be misleading. And we can help them, we can help educate them, overcome that, and help them make the right decision.
Absolutely. So people that just bought a home, first time buyers, they're hearing all this stuff that the market's crazy. What do you say to those now new homeowners?
Yeah, for the folks who just recently bought a home, probably early this year
Yeah.
and last year, end of last year. I'm sure they're concerned with all the information they're seeing out there, and the fact that the economy is starting to shift and the real estate market started to shift as well.
Right.
You know, I was one of those buyers many years ago when I first bought my home, and I bought it in 2008. That's when I bought my first property, and I witnessed the market go kind of dip a little bit. It was about 10% to be frank, of the market that when I bought it. So at first I was feeling nervous and like, oh my God, this is gonna get any worse, right? Yeah. But what I've learned is that, you know, when you hold on to real estate long enough, right, there's always going to be the upward cycle there.
Yeah.
So the goal would be, if you can prevent from selling where you're gonna take a loss, and just hold on to it and let it appreciate more when you have enough equity there.
Right.
So if you were to sell it, you would either break even, right? Or enjoy the appreciation you've gotten for many years.
Right.
So for me, it took me about, say, 7 years when I noticed again that there was a healthy appreciation, and 5 years later, that went 50% more.
Right.
Right. So you see the difference, guys, when you hold on to something a little bit longer.
Right.
So a lot of folks, what they do is like they end up selling a little bit too soon.
Yeah.
Right. Instead of holding on to it a bit longer,
right,
where they can reap the majority of the reward.
Absolutely.
There as well.
Yeah.
And the other thing that I would say to a lot of the folks who are concerned about the market is that a lot of the folks who bought homes the last couple of years, right, they had mortgages with interest rate in the 2s and 3s, low 3s. So I don't think anyone's thinking about selling anything at the loss, because what they've gotten, the monthly cost is so much cheaper than now.
Right.
Right. So
yeah,
we're gonna see the inventory problem probably continue to remain where it's at, and whatever's gonna happen with the economy sector, right, financial sector, I think real estate in the end of it is gonna do okay, right? And once we come out of it, right, maybe it's gonna be 2 years, maybe it's gonna be 3 years, we're most likely going to see more of a healthy appreciation when it comes to real estate.
Right. Yeah, I agree. I think holding on to your asset is always a long game. I mean, I think last year when we saw just this crazy low inventory, but rates were so low, like you could sell after 2 years and, you know, your home would still appreciate. But,
yeah,
you know,
listen,
people didn't kick themselves.
You did it yourself, right?
I did it myself.
You bought a home and you guys took advantage of the market, sold it within a year because you found something else that you love.
Exactly.
More,
Exactly.
right? And it worked out.
Right.
So there's still opportunities like that, guys. There's still that. Those are still happening. We're seeing them, but we don't think that that's going to be the norm moving forward. But every scenario is different, and that's why, you know, we're here to have conversation and advise our clients, so they can make the right decision.